Hey, it's Anthony with Land Title. I wanted to bring you your Boulder County update for the month of June, and there's some good data in here. We have, crested over the peak of the year, and we really are getting into a really nice spot in the market where we're really seemingly understanding what's happening this year, right? We've had such a reduction in our total year-to-date sales from last year, but coming off of the peak of maybe the busiest year that we've ever really felt in real estate, we're here in a time where we're down 18% in solds. Under contracts are down about 13.5%, 14%. Our fallout rate's a little bit higher than usual. We were looking at the numbers this morning, and at Land Title, we're experiencing something like 13% in a normal year, 15% this year. So it's really not that much more extreme. But we really are seeing kind of the new normal set in with these higher interest rates in place. So let's dive into this a little bit deeper. There's definitely some things in here that we need to talk through. So let's look specifically at inventory. Inventory here, this is broken down on the table below by city in Boulder County, but as a whole, year over year, we're actually down in inventory from last year. Who would have known? Because we've been, coming through that spring market with a very drastically different market than before. And now we're really similar to where we were last year. We're only year over year 5% off. Well, what does that really mean? Because all these markets have changed. Places like Niwot have 75% more inventory, but it only has 21 homes on the market, so it's still a really reasonable market. Places like Boulder, up 25% year over year, almost 400 units on the market. So the city of Boulder has a lot more inventory than it did last year. Or you go out to Superior and there's a huge inventory shortage compared to where we were last year. Only 35 units on the market, down 27%. So that being said, let's take a look at the month supply of inventory. So this means if no more homes come on the market, how long does it take to sell everything available? Well, this is slightly deceiving because it shows 2.7 months of inventory, right? That's what it is. There's 2.7 months of inventory, but it's very different in different places. Most of the markets in Boulder County are trending right around 2, right? Outside of Louisville, which is the anomaly, it's almost always the anomaly. There's never any inventory in Louisville. Pre-pandemic was the same way, right? There's no difference here except Louisville has 1.6 months of inventory. The city of Boulder has 3.2 months of inventory, which is a 70% increase from this time last year. But we also see other markets in Boulder County making some extreme changes like Niwot. So some of those more expensive, higher price point markets, we're seeing some rise in inventory. Louisville is a higher price market, except it's always just short on inventory. It's very, very sought after, it's very desirable. So I think that's something that we really want to take into account when we're doing this. All right, let's look at the days in MLS. So days in MLS talks about like how fast is the market, right? How fast is it before we go active to under contract time? Active to under contract time right now is only 28.5 days. So 28.5 days means we basically take a month to go under contract on average. Well, the median's at like 9. So if we go 9 at the median, but we're going 28.5 on average, this is more of a normalized market where last year, as it started to trend up in June, which honestly we'll start seeing it trend up in July. I thought we'd be pretty flat from May to June, which it looks like, day and a half different. This is definitely this saddle, right? So things are going to trend up the rest of the year. The market tends to slow down after that spring kind of turning into summer market. And that's not such a bad thing, but certain markets are at very different points, right? We just talked a second ago how there's 4 months of inventory in Niwot, but yet it went under contract in 6 days on average last month. There's just not very many people out there buying in certain markets. Louisville, 13.5 days in MLS, right? It's a super fast market. There's not enough inventory. And then you got places like the city of Boulder at 33.5 with a lot of inventory, say 3.2 months. So each one of these markets is moving at different paces. Everything's trending in the same direction generally, but the one thing you need to remember is we need to really focus in on our submarket data. So we have some really helpful slides for you if you're working with your buyers and sellers, because a lot of it's based on price range, right? Because affordability, especially with the higher interest rates, is being squeezed, and that changes a lot. Well, if we look at the high end of the market, we had 17 sales last month over 3+ million. We actually closed that gap a little bit more than we had before. And so there's a lot going on, cash, high-end market. We're still seeing that pretty vibrant. Now, his inventory is rising dramatically, right? You can see it in the 3+ million market, 97 active units on the market now. That's up 38% rise from this time last year, but we're still seeing a lot of sales. There's a lot of cool stuff there, but more stuff is sitting. And I think it's because a lot of people are looking for a certain price, or maybe it's just not in a really great location, move-in ready, and it's older architecture or something, but it's still a really nice home. Some of that stuff doesn't seem to be trending or moving as fast. So what about the peaks of the market, right? We're talking about that maybe 600 to a million range is where we have the most amount of inventory, but 600 to 800,000 is moving really well. You can see it's head and shoulders above what's going on with the sold data. Excuse me. All right. So 600 to 800,000 is what I was talking about. And, that is the market where it has the least amount of decrease outside of the multi-million-dollar market, and that has been affected by the cost of money. Well, I think largely that 12% decrease in solds in that market is because we're still squeezed in inventory, and it's one of the cheaper products in Boulder County where you can actually buy or sell a property. So take a look at this. We get over here to our month supply of inventory and days on market by price range. That 600 to 800,000 range, we're still under 2 months of inventory under that price. We are still seeing the market moving super fast. That's 23 days in the MLS. If you get into those 300 to 500 range, it's no wonder condos are doing what they are in Boulder County, but they're not doing it anywhere else into the Denver metro area. That's the most affordable product. And if you want to live in a certain location, which it seems like people are really being driven back to good locations rather than moving that suburban sprawl we saw during the last couple of years. So there's a lot of differences here. The big differences we've seen over the last 3 months, over 2 million, lots of rise in inventory. This last month, we saw a big rise in inventory over even 800,000. So a lot of the markets are starting to slow down. We're starting to feel that summer market, right? And there's nothing wrong with the summer market. It's going to feel a little bit different than the spring market. It's a little bit slower. It just isn't quite the same as some of the other markets that we're used to, right? So as we get into the third quarter, that third quarter is going to feel a little bit slower. But as you can see in years past, the third quarter is not a bad market. It's just slightly slower than before. We're going to kind of trend the same direction because it's consumer behavior. Interest rates are really similar to what they have been for a while, so the buyers are staying stable. The big difference is the sellers have pulled back because they're not trading a 3 or 4% interest rate loan for another one like that. They're having to buy it at a much more expensive rate. So if you look at this, I like the year-to-date sales. That's why we use the sold analysis. That being said, you can see most of the cities are down, 15 to 20%, something like that, right? 26% over the last 12 months. So that's trailing 12 months. This is one of the biggest numbers we've seen in a long time. Big slowdowns, right? But it's going to start to make up for it in the third and fourth quarter. The first 2 months of the year were crazy slow compared to what they were a year ago. So that being said, I think this is a really good time to kind of, feather these numbers a little bit and just kind of bring some light as to this might be about as bad as it gets, right? Because though that first 2 quarters were way slower than the previous year's 2 quarters. But then we got into the slower markets in 3 and 4 as interest rates started to rise. People have acclimated. We're going to start making up some ground, or at least kind of stay stable with what we were experiencing last year. So we're going to be comparing different sets of data, right? We were comparing the hottest market we'd ever experienced in a huge inventory shortage to higher interest rates in a low inventory situation. So that being said, let's take a look at some of these other ones and continue through here on our data journey today. The average sold price, this is an interesting one because month over month, we chased prices down from like March of last year all the way through January or through December, right? And then they've started to trend up pretty significantly over the course of the last few months. But you can see over the last 12 months, we're up 2.5% over this time last year. Month over month, we're up 2.5% from last month. So we're starting to see all those negative numbers go away because we're comparing them to not the frenzy of the market, to some more, some more behavioral changes that are a little bit more normalized. So this is a really strong slide to share with people right now, or at least the numbers are really strong, because when you say month over month, we're up 2.5%. Year over year, it looks like we're down about 8% in total sales price, but that's the average sales price. It just means different compositions of sales have moved, different markets within Boulder County are changing, but over the last 12 months, 2.5% increase in average sales price over all of the submarkets outside of what looks like Superior, just barely, and Niwot. Everything has gone up, between 0 and 4%. So all that fiscal and monetary policy has really slowed things down. The average sales price is showing that, we're stabilizing. We kind of plateaued like we have over the last year, and that's a good sign for the market that we're in. All right, let's look over at one of the other slides. I've got a couple more to show you. This one, I think, kind of tells the story about how it's not drastically slower than it was a year ago. So this could be a really good one to share out. We're down quite a bit in total sales numbers, but we expect to outperform that fourth quarter because of what we're seeing there. And the last slide that I wanted to share with you is this one here. This is our percentage listed sale price, right? We hit the peak of the market in May. We've started to trend down. It's a little bit more friendly out there as a buyer right now. Sellers, still looks like you're getting close to full price, unless you're in that really high-end part of the marketplace. But that being said, we're in a more rational, reasonable market to purchase it. Are interest rates higher? Sure they are. But people don't feel like they're giving away the farm to go buy a house. They can negotiate a little bit. Doesn't look like you're getting a lot of concessions yet, but this should trend down the rest of the year. So that being said, I think it's a really good time for buyers to start shopping now and then into the fall. So if you have any other questions, I'm Anthony at Land Title, and I'll catch you next time. Don't forget to like and subscribe to the video. Bye.